Hello everyone, and welcome to the Binance CoinM Futures tutorial. Today we'll be looking at a couple of things so we can get to trade on the Binance Futures without any issue. So first of all, our content. What are futures contracts? Functions of futures contracts. Key futures terminology. Quarterly and perpetual futures specifications. How to trade on Binance Futures. What are types and users, and a live trading demo. Without much ado, let's begin. What are futures contracts? Futures contracts are agreements that allow traders, investors, and commodity producers to speculate on the future price of an asset. These agreements enable the exchange of an instrument sometime in the future at the expiration date from the moment the contract is created. This means for every buyer of the instrument, there must be an equally willing seller. There is a typical underlying instrument upon which the contract is based. This could be any asset, such as an equity, a commodity, a currency. In this case, the underlying assets are cryptocurrencies like Bitcoin or Ethereum. Functions of futures contracts. Futures contracts typically serve some critical functions in the traditional financial markets. Some of them include hedging and risk management. Futures contracts can be used to mitigate against both general and specific risks. For example, a farmer may sell futures contracts for their seasonal farm produce to ensure they get a certain price in the future, despite unfavorable events and market fluctuations. Similarly, in the crypto market, Bitcoin miners could sell Bitcoin futures contracts at a certain favorable or profitable price. This will preserve the fiat value of some of their Bitcoins in the event of a price decline, thus hedging their exposure to extreme market volatility. This is especially important as most Bitcoin mining costs, such as electricity, still have to be paid for in fiat. Another function, leverage. Futures contracts allow investors and traders to open leverage positions. As contracts are settled at the expiration date, investors are able to leverage their position. For example, a 10-to-1 leverage allows traders to enter into a position 10 times larger than their trading account balance. Another function, short exposure. Futures contracts also allow investors to take a short exposure to an asset. A trader or investor could decide to sell futures contracts without needing to own the underlying assets. Futures settlement mechanisms. The expiration date of a futures contract is the last day of trading for that contract. After that, trading activities are halted and the contracts are settled. There are two major mechanisms for futures contract settlements. One, physical settlement. In this kind of settlement, the underlying asset is exchanged between the two parties, buyer and seller, at a predefined price. The party that was short or sold has the obligation to deliver the assets to the party that was long or bought. 2. Cash settlement. In this kind of settlement, the underlying asset is not exchanged directly. Instead, one party pays the other an amount that reflects the current asset value. A typical example of a cash-settled futures contract is an oil futures contract, where cash is exchanged. Instead, as it would be fairly complicated to physically trade thousands of barrels of oil. Cash settled futures contracts are more convenient and therefore more popular than physical settled contracts. Even for liquid financial securities whose ownership can be transferred quickly, this is still a fair way of settling. Some key futures terminology. 1. Leverage. This is also known as trading on margin. It is a service that provided by an exchange or broker and enables a trader or investor to open a position size larger than his account balance. 2. Initial margin. This is the minimum value you must pay to enter a leverage position. Maintenance margin. It is the amount of collateral you must have in your trading account to keep trading positions open. Liquidation. This is the forcible closing of your trading positions that occurs when your collateral falls below the maintenance margin. P&L. This is short for profit and loss. While positions are still open on the futures market, your P&L is unrealized and can still change. When those positions are closed, the unrealized P&L becomes realized P&L. CoinM futures contracts. Binance CoinM futures contracts refer to a series of cryptocurrency derivative products offered by Binance that are margined and settled in the underlying crypto asset being traded. There are currently two major products offering up to 125% leverage available to traders and investors alike. They are the quarterly futures and perpetual futures contracts. Quarterly futures. Quarterly futures contract is an agreement to buy or sell the underlying assets, in this case Bitcoin, at a predetermined price at a specified time called the delivery date in the future, which in this case is 3 months away. On this date, both contract buyer and seller are obligated to execute the contract regardless of where the price of the underlying asset is actually at. The buyer gains if the settlement price is higher than the entry price, while the seller gains if the settlement price is lower than the entry price. However, holders of these contracts are not obligated to hold them till the contract expires. These positions can be closed at any time at the current rate for these contracts. Also, depending on market conditions, futures contracts typically trade at some negative or positive difference to the spot price of the underlying assets. The value of these contracts continue to fluctuate in response to market forces from the point of creation till they expire. As the settlement date draws closer, futures contract prices are expected to gradually converge to the spot price until they eventually have the same value. Specifications of a futures contract. The Binance CoinM BTC USD quarterly 0925 futures contract is a cash delivered settled futures contract. This means that when the contract is due, the underlying asset is not exchanged directly. Instead, all open positions will be delivered at a settlement price. The ticker name means that the contract is Bitcoin, quoted in US dollars, and will expire in 3 months, September 25th to be precise. The inverse nature of this contract, however, means that it is priced and settled in Bitcoin, specifically today's Bitcoin, and that is also known as the notional value of the contract. The standard position size on this instrument is called a contract. Each contract has a contract multiplier. It represents the value of the contract. For this instrument, that value is $100. 20 contracts of this instrument will have a value of $2,000. Some key terminology in quarterly futures. The index price. It is the aggregate price gotten from the major spot exchanges, weighted by their relative volume. Notional value. It is the contract value of a futures contract. It is usually denominated in Bitcoin, more specifically today's Bitcoin. It is calculated by following formula: contract units multiplied by contract multiplier divided by entry price. The mark price. This is calculated using the index price and a moving average. Settlement price. This is the average of the index price in the last 1 hour before the contract expiry. Delivery fee. This is a percentage of the position that is paid in fees upon settlement on expiry of the contract. Now let's move on to perpetual futures contracts. A perpetual contract is a special type of future contracts, but unlike the traditional form of futures, it doesn't have an expiry, so one can hold a position for as long as they like. Other than that, the trading of the perpetual contract is based on an underlying index price. The index price consists of the average price of an asset according to the major spot markets and their relative trading value. The CoinM perpetual futures are similarly priced and settled in the underlying cryptocurrency of each contract. Some key terminology in perpetual futures. Funding rate. This is the periodical payment that occurs between buyers and sellers of the perpetual futures contract. When the funding rate is positive, longs have to pay shorts and vice versa. Mark price. This is an estimate of the true value of a contract, also known as the fair price, as compared to its actual trading price. The mark price calculation is very important as it determines the initial margin needed to open a position or maintenance margin needed to avoid liquidation. The mark price is based on the index price and funding rate. These funding rates are designed to ensure that perpetual futures converge with the actual spot price of the underlying asset. How to trade on Binance futures. To trade on Binance futures, you first of all need an account. To open an account, click on the referral link in the description below, enter your email, check the referral ID to ensure you get your 10% commission discount. Ensure you have ticked and agreed to the terms of service and click Create Account. You need to get familiar with the exchange user interface. On the screen here, we have in the top a menu bar. Slightly below we have the price chart. Below that we have the trading activity panel. To the right we have the order entry field. And at the bottom we have the margin overview. So let's get started. From the home page, we move over to the Derivatives tab and click on CoinM Futures. So here we see the different parts of the exchange. You see the charts, the order book, the order panel, the margin panel, and the trading activity panel. At the top here we have the menu bar. So what I like so much about the new look of the exchange is it's so customizable. You can change your screen from light to dark at the click of a button. I prefer dark though. You could also do a lot of customization to remove the chart if you want, remove the depth of market chart, even the order book gone. Basically, you could remove everything. Let's take it back to the default. You could also move them around and put them how you want, whatever preference you have. Elements are movable, so I can move this here. I can move this somewhere here. Move the trade panel here somewhere. And just everything is so customizable. But you could always go back to the default settings. So we have our chart panel here. We have the original charts. We have charts by trading view. We have a bigger depth of market chart. So that's that. Also, let's not forget the menu panel or the menu bar. So here you can select the contract you want to trade. Here we can see there are only 2 crypto quarterly contracts. You have Bitcoin USD, ETH USD, Cardano USD, Link USD, BNB, but there's no, the rest are perpetual contracts. But for now, let's take a look at the BTC USD quarterly contracts. So here we have your leverage settings. You can select either between cross or isolated margin modes. So for the cross mode, you basically share your account balance across all your open positions, and that helps you avoid liquidation. But the risk of doing this is if there is any volatile market event, you could lose your entire account balance. So this is only recommended for really advanced traders. So a preferred mode to use will be the isolated margin mode, where the margin for each is restricted to each position. So select what you want and you confirm. You could also adjust the amount of leverage you want. So there's a slider here which you could move from 1 to 125. You could also enter in the leverage you want here. Maybe let's say 5 and confirm. There, you see. So here we have the last traded price. Over here we have the mark price. Over here we have the index price. Here we can see the 24-hour volume. And don't forget, these are contracts of 100 USD each. And here we can see the time to delivery, which is 18 days for this contract. That's till September 25th. So that's it for the menu bar. So let's go to the perpetual contract, because the calculation for the mark and index prices of that contract are different. So here we have the mark and index price, just like the quarterly futures contract, but we also have funding. So the mark price here is calculated using a calculation that involves the index price and the funding. So for the funding, it is basically the payment rate that is exchanged between the buyer and the seller. So when it is negative, shorts pay longs, and when it's positive, longs pay shorts. So that's it for the perpetual contract. Let's go back to the quarterly contract. So now let's head over to the order panel right here on the right. And here we can do a couple of things. This is where we make our orders for whatever quantity of contracts we want to buy or sell. So major things you need to know here. First of all, I would take a look at this. This is the unit. So typically we buy contracts. For example, on this Bitcoin quarterly contract, the minimum you can buy is 1 contract. But if you want to change the view, you could change the view to either contracts, or your orders will be denominated in Bitcoin. Let's stick with contracts for now. So we have a couple of other types that make our trading seamless. We have the first one is the limit order that we can see here. So basically, the limit order works in such a way where you put in the price that you want to purchase or open your order at, and you put in the number of contracts that you want to buy. So here we could either type in the number of contracts we want to buy, let's say 10 contracts, or use the slider at the bottom which calculates percentages of your account balance. So let's say we want to buy 10 contracts. Here we can see the cost. This is the cost to open a long or a buy trade. And here we can see the cost to open a short trade. So this is the margin. Basically, this cost is the margin that is required to open the position. So I think with my account balance here, I can even only open a position of 5 contracts maximum. And the reason for that is because I have about $100 worth of Bitcoin in this account. And as you can see here, we are on 5 times leverage. So each contract is about $100 and I'm on 5 times leverage. So the maximum number of contracts I can purchase with my current account balance is 5 contracts. Now let's talk about the market order. The market order is basically a type of order where you can place the quantity you want, but you have to pay the market price. So the difference here is you cannot ascertain the particular price you would get, but you have to take whatever the market is offering at that point in time. Another thing you might want to consider here is what kind of fees do you want to pay. There are 2 kinds of fees. 1, the taker fees, and 2, the maker fees. So the maker fees apply to orders that are posted here on the order book and are not executed immediately. So that kind of order is usually a limit order. Then the taker fees are orders that are placed on the order book and are executed immediately. And usually that is a market order. So the taker fees are actually higher than the market fees. So this is one thing you might want to consider when opening your positions. So on that basis, I would advise you to stick with limit orders for entries, but then you can consider using market orders as exits, closing your position. So we have the stop limit order. The stop limit order is basically an order where the order doesn't get placed on the order book here until a particular price, which is called the trigger price, is hit. So if I want to trade this contract now and I want to use a stop limit, I could say 10.5 and put my trigger price at 10.5. I can put my price at maybe 10.499.5 and put my order, maybe let's say 3 contracts. So what do all this mean? The trigger price is the price that would trigger this limit order, because the stop order consists of a trigger and a limit order joined together. So this will first of all execute before this order for 10.499.5. 3 contracts will be placed right here on the order book. So if you notice, there's a little difference here between the trigger price and the limit price here. So the reason you do that is you want to get a feel on your order. So whatever price, there should be a little price difference to ensure your order gets completely filled, although that might not be an issue with the number of contracts I'm trading here, which is quite small. Another order we have here is a stop market order. This order is just an order that combines the stop and the market orders together. So the same, it has a trigger price, but as you can see, there is no limit price. So basically, whatever quantity you have, it will be executed once it reaches this trigger price in the form of a market order. So that means you can't really determine what prices your orders might be executed at. And last but not least, we have the trailing stop. This is one of my favorites. You could use it as a form of stop loss or take profit order. So the trailing stop has three different fields here. So we have the normal quantity, and we have the activation price, and we have the callback rates. So the activation price is the price at which this order gets triggered. So you could be used as a take profit order or a stop loss, but most people use it as a stop loss, a form of stop loss order. So at this activation price, what happens is, let's say we're going on a long position at this price. We'll buy a contract and we'll go long, and we're predicting that the price of Bitcoin is going to go up on this contract up to 10,500. So we could set our activation price for 10,300. So what this would mean is that at this price, when Bitcoin trades through this price, if we are correct on our prediction, this order is triggered, and from that point on, if the price continues to go up, let's say it goes up to that 10,500, our target, this trailing stop doesn't execute, but what it does is whatever callback rate, which is a percentage, you specify, let's say 1%, when it gets past your target price, your trigger price or activation price here, and price begins to come back down. So from the highest point, price has gone to, after hitting your trigger, once it reaches 1% drawdown, that's the price goes down, let's say 10.5, that the price goes down at 10.5, that would be $105, and the price goes down from 10.5 to 10.495. An order will be placed at 10.495 to close out your position. So basically that's what the trailing stop does. So it's very useful, and you can use it to secure your profits without having to actively manage your position. On the auto panel, we also have what we call position mode. Now this is for traders who want to be able to go either long or short at the same time. So we have two modes. We have one-way mode. In the one-way mode, you can only hold one direction positions. So basically, if you have opened a long position, you cannot open a short position simultaneously. But with hedge mode, you can open both long and short directions on the same contract at the same time. So that is what that is. So it's a very useful tool for people who are looking to reduce their risk exposure by hedging. Here too we have reduce only. This has some advanced. So this is basically a setting that would only reduce your position and not increase it. It's very helpful when you don't want to make mistakes of adding to your position. So that's this option, if it's ticked, is really helpful. So with all we've learned, let's now make our first trade. I am looking at the Bitcoin USD perpetual chart. So I can see that in the short term, Bitcoin has made on the chart a higher high and higher low structure. And for me, this is a bullish structure on the 1 hour time frame. So I'm inclined to place a buy or long trade. Let's see how that will work out. I will place my limit. For the purpose of this demonstration, I'll place a market order of 3 contracts. But first, I have to put some money into the account. I have none, as you can see, I have none in the account. So that is very easy to do. Just come here, click on transfer, spot wallet the CoinM futures. I put my 100%, confirm, it's transferred. Another way is to convert. So this conversion option is very handy. If you are someone holding only Bitcoin, you can convert your Bitcoin or BNB assets and you get a quote right here. Let's say you want to trade on the Ethereum futures contract and you have some Bitcoin. You would be able to convert the amount you want. Let's say we want to get 0.02. 0.01, and we'll get a quote, and this is what I would receive for 0.01 BTC. So that will enable you to trade in the Ethereum perpetual or quarterly contracts. Very, very handy tool. Instead of having to keep your balances in another crypto, you don't have to. You can always convert just when you need it. So let's place our long. I'm going to place a market order. We're going to buy 3 contracts. This is the cost to open the long. And we click on buy. Order has been filled. Here now we can see our margin ratio right here, our margin balance as the market continues to fluctuate. Now here we can see our open. This is the trading activity panel. You can see the size, the number of contracts we just purchased, our entry price, which was an average of 10,269.5, the current mark price, and the liquidation price. So if Bitcoin should trade up to this price at my current leverage and my wallet balance, I will get liquidated at 7,603.4. This is your margin ratio. You don't want this to get to 100%. And this is my initial margin that was used to open this position. And as you can see, it's a cross margin. And this is my P&L, which is basically my profit, since it's in green. And here you can close your positions at market or by placing a limit order. If you want to place a limit order, you just come here and you put in the price you want and click on. So here, if you have any open orders, we'll see them here. Here we can view our order history. Here we can view our trade history, see the fees and whatever realized profit you've made. Here we can view our transaction history, which includes withdrawal of deposits. So that's what we have. So I can also close this position at market. I click close all positions. It gives me, do you want to close all positions at the market price? And I click confirm. So if I come to my trade history, see my sell order, which I used to close my position, 3 contracts, and I realize a profit of 255 satoshis. So that's that. Thank you for watching, and please do subscribe to our channel for more content like this. Like the video if you found it helpful. and leave a comment.